Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? Okay, let's get into gold, silver, cryptocurrencies, and everything that we want to make us or save us money. Anyways, listen, I had a nice chat with Dolores. Dolores, I just want to give her a quick shout out. She hit me up, said she urgently needed to speak to me, and I said, okay. I was wondering what was happening, and we started talking, and she says she was mad as hell. And I thought, oh, good Lord, what the hell happened? She said, I've been listening to you now for a couple of years. And I said, uh-huh. She was talking about the time everybody went into lockdown. And I told people, well, don't be so down about it. We started to see gold, silver, cryptocurrencies lose value. We saw stock market starting to drop. And I said, look, this, there's a silver lining in all this. And that's when I created the stock watch. And also spoke about this is a good time to buy into gold and silver. You could buy gold, I think it was around, oh, good Lord, was it $1,400 at the time? And silver, I think was like, I might be wrong, but I'll check the charts here in a minute, about $11 an ounce or so. But even so, I told everybody, look, this is the time to buy them. Just because everybody sells them. The markets get saturated. People panic. They're trying to wonder where their next dollar's coming from. Eventually, the sharks in the water start buying up the precious metals at a cheap price. So sure enough, the gold and silver took off like a bat out of hell. As a matter of fact, we've seen a record high for gold. I think it hit somewhere around June, I think it was. June, July of that summer. It reached a high, and she thought to herself, I missed the opportunity. I was thinking about it, buying into gold and silver when it dropped after the lockdown, but I thought to myself, it's going to keep going down. Then the next thing you know, before I knew it, it was all the way up too high, and I thought to myself, I missed out on the opportunity, and then all of a sudden it went down. Gold went from around $2,000 down to around $1,600. By February, and she said, see, maybe it's a good thing I did it. And I go, that's the thing about the markets. They go up and down. If you're trying to be slick and catch them and guess, you're going to be wrong. Because even when the gold price went down around 1,600, it was still higher than the value when it bottomed out there in March of 2020. And so eventually, it's been slowly but surely going up. She was telling me that she was mad because she just recently bought a ton of gold and silver. She moved over 40% of her IRA and her 401k just to be on the safe side into gold and silver. Of course, I didn't ask her how much, but you can almost guess how much when she said, when she looks at how much she paid for it now, compared to if she would have paid for it back in the March when the prices bottomed out, when we went into lockdown, she could have saved herself tens of thousands of dollars. When she said that, what went through my mind is, good Lord, I mean, there's a huge difference in value, but not that big. Based on what she said, I can guess that she spent somewhere around $100,000 or more on gold and silver. So I said, look, you can't beat yourself up. You can never second guess the market. You have to be confident in what it is you're investing in. And this goes for crypto people. Look at, if you are a big crypto fan and you're thinking to yourself, man, crypto is the future, to the moon it goes. Isn't that what we always hear? Then if that's the case, then stick with it. Just stay. Eventually the markets rebound. I have my concerns about cryptos and I expressed them and I watch them play it out in real time. But we're starting to see cryptos go up again. I'm saying just be careful, but you want consistency. And so far, there's been some consistency there. But I will always tell people to go to gold and silver. So I told her, look, we're not done. Gold and silver is still going up. And so, she was saying she was mad at herself. She was mad at me. She should have listened to me back then. You can't beat yourself up. I mean, there's people who bought when both gold and silver were at its highest levels, and they're still in the negative territory for now. You can see that gold is still going up. And I told them, look, don't panic. People are panicking. I said, these are speculators. You guys don't panic. It'll rebound. And that's exactly what we see going on. So, Dolores, don't kick yourself in the butt. It's a good thing you got into it now. I think 2023 is going to be a very interesting year regarding gold and silver. I am going to show you something about the central bank digital currency that I've been speaking about so you can see for yourself. Before we get started, do me a favor and hit the thumbs up button. And if you're not a subscriber, please do so, because when you do, it helps out the channel, and I certainly do appreciate it. If you're thinking about buying gold and silver, head on over to our friends at Money Metals Exchange. The link will be down below in the description. If you are a first-time buyer and you spend more than $100, use promo code Pimpy Silver. Yes, it has changed. PIMPY-SILVER. So if you're watching this video and it's an older video, make sure you check on current videos because the code is going to be changing from time to time from now on. Also, I can be found on other platforms. Everybody knows I have my own website, Pimpy's News Network. Over here, I post videos that I can't get away with over on YouTube. Also, I have a group on Facebook called Pimpy's Investment Chat. Over here, we do talk about gold, silver, cryptocurrencies, as well as foreign currency investments. Come on over here and join us. It's free to do so. You can also come follow me on Twitter, MeWe, YouTube, and Odyssey. The links for all these platforms will be down below in the description. So for whatever reason, if I get removed off of one platform, you could find me on the others. For those of you looking for my address, there it is right here. Pause the video, write it down, and feel free to contact me. A quick shout out to JR Buttons for sending me this nifty little gift. You can see he's hit all the greatest hits. We got Lynette Zhang here. He got Wall Street Silver, of course, yours truly. We got Greg Manarino over here. You know, the man who rubs himself with silver. I still love that clip. And then you got all the bad guys in here as well. Yes to cash, no to CBDC. Okay, just to prove that this is realistic and that what I was warning you about is happening. The people over there in Europe, they're doing the testing on the European Central Bank's digital currency. Just to show you what I was talking about, take a look here. So these are text messages that come from the European Central Bank. Your wallet, you have to create a wallet with the central bank. That's what they force you to do. And then you get your central bank digital currency. So it says right here, alert, funds not spent within the next 12 hours will be lost. Follow the links provided. Remember, I told you there are time limits on it. They don't want you accumulating wealth. And there's no more generational wealth transfer. I warned people that this was coming. Boost your social score by, 100 euros before the weekend. This is crazy. So they got credit scoring over there too. Payment decline. Turn on your location service to allow ECB wallet to verify and process your payment. So they want to be able to track you. Green tax, your payment, blah, blah, blah. It carries a 25% carbon tax increase. So just pause the video and read these right here. This is the thing that I've been warning people about. This is coming. You can see it's already here for some people. So thanks to JR Buttons for sending me those buttons. I truly do appreciate it. Also, I'm looking forward to it. Somebody said they own a tequila company and they were going to send me a gift. So, yeah, I can never say no to that kind of thing. So if you own an alcohol company, feel free to have me test it out. I'll let you know about it. All right, let's get in here to cryptos, all right? Look, they're in the green. We now see Bitcoin at $18,844. This is what I'm talking about. We're looking for consistency. Ethereum is above the $1,400 level, $1,409. XRP still around 37 cents, not a whole lot there. Cardano's at 32 cents, Dogecoin's at 8 cents, Polygon's at 91 cents. Lisa's got to be thrilled to death. Litecoin at $85.57. Solana at $16.48. I believe they've doubled their value within the last few weeks. Polkadot's at $5.20. Shiba still trying to get rid of one of those zeros at 509. Taking a look at Terra Classic, Luna Classic. Look at that, 3016. That's right, slowly but surely climbing up. That's what we're looking for, consistency. Look at that, just like that. Now it's 302. You gotta love it. Talk about a big gain. Look at this one here. Saitama. Saitama is at 00143. It's up 23% today. You can see the chart showing a huge jump. There is a push for both the Shiba Inu coin as well as the Saitama coin. There's like this burn-in frenzy going on. People trying to burn coins and lower the amount of circulation. It looks like it's doing what it's supposed to do. You can see silver at $23.83 an ounce. It dropped below the $24 level, which shouldn't be surprising to anybody, but you can see there's still consistency in the uptrend. Gold at $1,897.60. It got up there, then came down, and it started to recover. You can see here since November the 3rd, it has been in a consistent uptrend. That's exactly what you want when it comes to your investment. This is why I tell people now is a good time to buy into gold and silver. So like Dolores is talking about, she missed out on an opportunity. This is that opportunity all over again. I know they're talking about lockdown. And not only that, the death of the dollar is coming. It's coming. It's inevitable. More and more people are resigning. The Biden administration is lying about unemployment numbers. They're lying about the economy. They're lying about inflation. I love when I see other videos of other experts out there talking about it, so don't just take my word about it. Let's listen in. There's a report from over there at JM Bullion. I'll let him tell you the same thing that I was speaking about. Let's listen in.
Non-farm payrolls, the big pay report from the government came in at 223,000 new jobs, above expectations of 200, but below last month at 256,000. As a result, the unemployment rate came in at 3.5, a little bit lower than the 3.7 expected. Hourly earnings did raise just a little bit at 0.3% for the month, which is about 3.5% for the year. It does not keep up with CPI, and we'll get those CPI numbers next week. It looks like, to me, average hourly earnings are a little bit less than official inflation. So that means that about 3 to 4 to 5% clip conservatively, wage earners are losing purchasing power per year. Of course, that's looking at the government numbers. If you look at shadow stats and what we think are real inflation numbers, it's much higher, probably around 17 to 20%, or it was, although it's probably coming down just a little bit. Factory orders were a negative 1.8%, meaning that we're not ordering as much stuff, and I believe that's because we're in the deflationary cycle. And the ISM Services Index, another measure of the service economy, was down below 50 at a 49.6 print. That's a slight deceleration. Way under expectations, however. Economists expected the service economy to do a 55.1%. Didn't turn out that way. Looking at the markets, the Dow Jones is trading up 517 points. The headline on CNBC is that stocks stage first big rally of 2023 as hopes of easing inflation grow. Dow up 500. I don't know where they get that because the Fed was not particularly was not particularly frothy on the economy. I think that's the market just making it up and having a little beginning of year enthusiasm. I don't think that will probably last, but we'll see what happens. So Dow is up 1.57%. The S&P is up 1.57%. The NASDAQ is up 1.61%. And the Russell 2K is up 1.91%. If we look at the bond markets, we're still in yield curve inversion, indicating an oncoming recession. That's why I don't understand the stock markets.
Yeah, hello. That's what I've been saying. You can't trust what you're seeing in the stock market. It's artificially pumped. When the government's telling you one thing, and you want to validate it, there are different types of indicators in the market that we can see as to whether or not the government's telling you the truth. You can see that he's pointing out those very things. He said, I don't understand how the market's doing good. You know, we're being told that there's this fierce rally and the economy is good. All the indicators that are out there is that we're heading into recession, a big recession.
The U.S. 1 month is at 4.198, and every Treasury issuance from the 1 month all the way up to the 10-year is in backwardation with the 10-year. In yield curve inversion. The 10-year is at 3.589. Every other issuance from 7-year to 1 month is at a higher rate. That means that bond investors see more short-term risk in the economy than long, which is an indicator of an oncoming recession. If we
see, there are other indicators out there that we can look at when we know that the government is full of crap.
Wage growth is down. So there's a chart here from the Labor Department. I'm going to share a screen and show this to you guys. And this situation really kind of depicts what's going on with hourly earnings. As noted, we are on a decidedly downward trend in 22 with respect to wage earnings. So the average that weekly wage earners are earning, the acceleration in that is declining. So in other words, they're still getting more in terms of their wages, but the amount that they're getting more is decelerating.
So having said that, under Trump, we know that the household median set a record. It was the biggest gain for household medians, which is combined income. People combined had more than $4,000 additional dollars per year. That's gone down as well. So
the rate of acceleration in wage growth is slowing down, and pretty soon we may go to a negative print. We'll have to see. Here's some charts that somebody wrote an article on Zero Hedge and put out there with regard to the BLS report on non-farm payrolls. And what they do is they compare a couple of things. They're looking at average weekly hours on employees. Not only are wages going down, wage increases, but the overall hours that employees can work has gone down since the pandemic. There's also a difference between the household and establishment survey. The establishment survey is a survey that doesn't look at actual households. It looks at proxies for this in the economy, but the actual household survey done actually queries households and is more real data. And the household survey has been for quite some time showing more unemployment than the establishment survey. The household survey was closer to the other unemployment report that we got before the ADP, before they changed it. The ADP now changes to be more like the establishment survey.
Yeah, see that? They're lying about the numbers. And what is the difference? 2.1 million difference. One is the actual, which is the red line, and the other one is the fake, the green one.
So now you're getting a lot of playing around with the numbers, and you can't compare past periods for ADP and all that stuff. But it appears as though when you get real boots on the ground data, unemployment's actually worse than what you get through these proxies. And that
Pimpy, didn't you say that? Well, I'm glad you asked. I did. I did say not to trust the numbers, that they were lying to you. And all this so-called, well, Biden setting records on job growth. No, he's not. Not at all. What they should do is take what Trump's job numbers were prior to the lockdowns, and then any numbers that Biden gets above that, then those are job creations. All that's happening is that people are going back to the jobs that Trump created.
Shown by these two lines, and this is the different about 2.1 million, which is a lot of jobs. Job changes November to December. We increase part-time and a lot of multiple job holders. That means full-time we did not have an increase.
Full-time jobs from November to December. Remember, we're talking about all the record growth numbers. Yes, we got more people employed. -1 for full-time. An increase in part-time, 679, and multi-job holders. What does this mean? If you have multi-job holders, let's just say a very small portion of it do it just because they like the money. But for the most part, it's because people can't make ends meet and they're forced to work multiple jobs. Why? Because they didn't listen to Pimpy when I told them to invest in gold and silver.
I think it was like -1. So about the same, but part-time jobs went way up and multiple job holders. So when you see a certain amount of jobs in the economy, a certain amount of people, you have to account for the fact a lot of people have multiple jobs. So it may actually be less people employed than the BLS actually believes. And I think that is borne out in the labor force participation survey, which you can see, which is just simply the amount of money, the amount of people in society that can and are willing to work versus employed, and that's down to 62%. So that would be basically a 38% unemployment rate if you consider all those people. And when you add in the fact
a 38% unemployment. 38%. What did Biden say today in a Twitter account? He said, we are at record low unemployment. And then I blasted him in there for lying about this, whoever's handling his account. And I've resorted to the fact that, the Democrats, they don't care what you know. They know you won't research it. They're just going to lie to your face. Straight lie to your face. They're at that point now, and they're that desperate, and that's what's going on. 38% unemployment.
We have multiple job holders and part-time jobs. The unemployment situation is not quite as rosy. March to December of a longer time frame, full-time jobs went way down in the economy. Part-time went way up, and multiple job holders went way up. Now we're going to switch over to going.
See, this is what I was talking about. We have different indicators that we look at to validate whether or not what we're being told is BS or the truth.
Over gold and silver. We're at the CME's website. We're going to take a look at gold first. We're going to look at volume and open interest. Not a lot going on in the January contract. We're just going to get this year's data, guys. We're in 2023, and this is just the way that they choose to do this. Of course, we can go back if we want into previous months or go forward. It doesn't look like we're going to go back and get the old data. So it looks like we have 1 day's worth of data here for January. We sell at a price of $18.55. Not much trade going on. Volume of open interest on the February contract. 358,000 contracts, pretty good. EFP 6214. So in February, there were 6,200 contracts of gold that they went and got the gold, or they went and did price arbitrage with the London market. I suspect that there may not be as much liquid gold on the Comex because we've seen these EFPs. And what this is exchange for physical between a futures contract in Comex and the potential for an OTC contract in London and the potential to actually get that metal, or maybe play price arbitrage between the two products, the two markets. But this indicates that there may not be enough available gold in Comex to satisfy current demand. That's something.
This is what I've been speaking about. I told you we were watching the depletion of physical gold in the Comex and the LBMA. And you can see right here, he's saying that it looks like they don't have enough precious metals to satisfy the contracts. Where are they going to go to get the metals to help them cover their contracts? I'm going to guess they can reach out to stackers if they want to offer us a pretty good value. So don't procrastinate. Right now is a good time to buy your precious metals. And I will always tell you to go to Money Metals Exchange. They have the most competitive prices out there. I've done several videos. I have people blast me, tell me, go to this one, go to that one. Then I do a side-by-side comparison, and there is no comparison. Money Metals has constantly had the best price for gold and silver, or the second best. They're always the most competitive. And that's why I advise you guys to go over and purchase from them. So head on over there. If you're a first-time buyer and you spend more than $100, you know the deal. Use promo code PimpySilver. And along with your order, they will send you a free additional half ounce of silver.
Something that we'll continue to pay attention to. If we look at the settlement data, which tells us where the price went, as of yesterday's data, Thursday, January 5th, we had 190,000 contracts closed on the dominant month of February for gold. And they settled down at about $18.40 to $18.40.60. If we look back one day at Wednesday's data, again, the February is the dominant contract. Estimated volume for the day, 200,000. Average close, $18.59, up $12. So we've seen a little bit of back and forth on gold. Definitely overall starting the year very well. Looking at the actual depositories, Comex has lost a fair amount of gold in the last 4 weeks. This is a rolling 4-week chart we look at every
lost. Their inventory is being depleted.
week from Nick Laird's site Gold Charts RS. So overall, a reduction in the amount of ounces of gold in the Comex. And if you look here, the last time we covered this, there were 13 million ounces of gold in registered, which is the liquid tradable inventory in Comex, whereas eligible is private storage and therefore not liquid, unless people want to put it in registered. There's a process to do that. This is down 2 million ounces in just a couple of weeks. So gold is being taken off the Comex.
Why are you procrastinating? Look, I know there's people out there going, Pimpy, I can't afford gold. It's too expensive. Look, they have fractionals. I've shown you guys several times. This is one I want to bring to your attention. And yes, of course, I'm on Money Metals. Come on now. If you go over here, this tab right here says gold, right? See this? It's a drop-down menu. You can go over here where it says gold bars or gold rounds. It doesn't make a difference. Just go to bars. So, yeah, if you can't afford the 1 ounce bars, I understand that. I get that. Not everybody can. But don't be left out, because guess what you can afford? Half grams for $44.49. Over here, you got 1 gram for $85.30. So you might not be able to afford, let's say, a 10 ounce bar. Wow. Or even a 1 ounce bar. But you can afford these fractionals. Like I said, a half grams, $44. 1 gram bar is $87. 2.5 grams for $186. These are more likely in a lot of people's price range. You know what I mean? Look at this. 5 grams for $343. So don't feel like you're going to be left out, because you're not. You have choices to buy smaller amounts. And guess what? Watch this. Go over to silver. Silver bars. Scroll on down. Look at this. You can buy a sheet. They break off 100 1 gram bars. 100 of them. I do, just because in case the doo-doo hits the fan, I need a barter. I want these fractionals to deal with. I don't want to take in a coin that might be worth, $5,000 to buy a loaf of bread. So you definitely want fractionals. So look at this. You get 100 1 gram bars for $160.98. That's 1 gram. They're really tiny, and I have some. I'll have to show you guys in a video one of these times. Or over here, you can get 10 gram bars for $152. They're much bigger, obviously. So there are options. You can see right here. Look at this. A 5 gram silver bar. See this? For $13. So if you can't afford the 30 or 40 bucks, what I'm saying is this. There are options out there. Don't be left out. Look at this. A 1 gram silver bar for $9, you guys. Don't get left out. Anybody and everybody that's in investments that knows their butt from a hole in the ground is rushing, and I mean not running at top speed to buy gold and silver. And they are depleting the Comex as well as the LBMA. do what they do, not what they say. Head on over there to Money Metals. The link is down below in the description, you guys. Right now is the time. And again, I want to shout out to Dolores. I appreciate her message to me, but I don't think you got in too late. I think actually you got in at a very good time. If you waited maybe a couple more months from now, it might be a lot worse than where we are now, because I'm anticipating a huge rush on precious metals, and so should you. Anyways, that's it for now. Look forward to your comments down below, and I'll get back at you later. I'm out.